morning, ladies and gentlemen. My name is Alfonso Galante, and I am the Head of Strategic Planning, M&A and Investor Relations here at Unipol and UnipolSai. Well, I'm going to run through our Q1 results for you this morning. Before starting, I just want to point out, back in November last year, we decided our quarterly reporting would be slightly shorter in format, moving forward, yet still providing the most salient information to you. The results today are solid. Let's start. Consolidated results are in line with this time last year. Consolidated gross profit of 225 million euro at Unipol, 209 million euro at UnipolSai. Non-life business across both companies saw pretty moderate growth, while the marginal decline in life is as expected, given our strategy in this regard. Consolidated net profit is 157 million euro for Unipol and 147 million euro for UnipolSai. The group net result comes in at 107 million euro and 140 million euro for the two groups respectively. The relatively higher net group results of Unipol versus last year is simply because of our increased stake in UnipolSai, all very much in line with our strategy. Turning to the non-life side of the business, there is not much that needs to be said here really. The trends which we saw at the year-end 2016 continue to play out in the first quarter of this year. Conditions in the motor business remain challenging, and we are increasing our non-motor business, again as outlined in the strategic plan. Overall premiums at Unipol are at 1,983 million euro and the equivalent figure for UnipolSai is 1,790 million euro. Okay, what we have here is this. Combined ratio for this quarter is 96.5% for Unipol, 97.3% for UnipolSai. The increase in expense ratio is linked to the pressure on motor premiums and the extension of agents' agreement to the ex-Fondiaria site network. The effects of Nat Cat have been clearly felt on the loss ratio this quarter, with an impact on UnipolSai of 0.8% in excess of the same figure for last year. Even so quickly, our other insurance companies. Continued positive performances increased premium across the board at Unisalute, Linear and Arca. On the life side, the decrease in premiums at both Unipol and UnipolSai thoroughly expected, given our clear strategy to limit the sale of traditional products, totally in line with the overall trends being seen and implemented market-wide. Total premium are 1,227 million euro for Unipol and 1,043 million euro for UnipolSai. The banking business, it is what it is. The key trends are stable, and there is very little that I can add here, apart from pointing out that the stock of deteriorated credit has further decreased in the first quarter of this year, as a result of a significant reduction of inflows, as well as the management and closure of non-performing positions. Okay, let's move on to investments. We continue to shift towards corporate and non-Italian govies, and we say we would and are comfortable with our current asset allocation at this stage. Turning to the next slide, we can see that coupons and dividends are slightly up on this time last year at 3.3% for Unipol and 3.5% for UnipolSai, confirming the appropriate positioning of our assets. The total yield for the quarter comes to 4.1% and 4.5% respectively. On the real estate front, you see 110 million euros of sales, the majority of which is related to the successful sale of a mixed-use portfolio, which we had previously signaled to the market in February. The offload of these assets has allowed us to refine our real estate portfolio. As you can see, our solvency ratios remain strong. All in all, a solid quarter, in line with our expectation, and a good platform for which to move forward through 2017. Thank you.